Yo, I cannot stress how important this video is on the most important emotional aspects to trading, which could benefit you or they could actually be hurting you. You all know emotions are your greatest obstacle in trading. I'm going to relate each emotion back to the charts so you could visually see the technical analysis backing each emotion and what we have to do when we're in trades, what to avoid, and what we have to do better to get more profits and take better trades. Now, this was on my Instagram yesterday. I'm going to go back to this picture. But first, if you haven't followed this already, I'm going to link it in the description below. I post daily trading recaps on my Instagram, along with very good trading tips and tricks that you're really not going to find anywhere else. The link is in the description below. It's a good resource, and you're definitely missing out if you're not following it. Now, the first emotions I want to relate to the charts are conscious, confidence, patience, knowledge, reality, and intellect, because in my opinion, these all go hand in hand. So I wrote this little document up about these 6 little emotions because it's very important for us to have knowledge and intellect. We have to first know how the market properly facilitates trade. It's like any auction. It's going to move like an auction, and we have to have proper market knowledge about how price trades and how volume facilitates the market itself. We need this knowledge, and if we don't have this knowledge, our trading is going to be 10 times harder because we're going to start making decisions based off of emotions and not facts. If you don't know how the market moves, you're going to be making decisions not off the proper things, and it's going to be more on a whim with your emotions telling you something to buy or something to sell based off of price just moving up or down. Now, we also need to be conscious of reality because the market will always be correct. The market will never be wrong. It's often us as traders and our opinions which makes the market wrong because we have this false sense of reality. So we need to be conscious of the context, the conditions of the market. We need to be conscious of volume, market participation between buyers and sellers. We need to understand and relate the price back like it's an auction and understand where we could take valid trading decisions. Now, once we're conscious of reality, we have to be confident in our edge. Now, if you don't have proper market knowledge and have this intellect, you're not going to have an edge. Edge gives you an advantage over the competition. It's something you do that you know will make you money in the long run. You can't have confidence in the market if you go in there blindly without an edge. I know my edge is going to make me money. If it doesn't make me money today, I know it's going to make me money in the long run. So I trade with this edge. I trade every single trade I put on has to have a plan, and it's based off of my system. If you don't have an edge, you don't have a plan, you don't have a system, then I look at it as you don't have a trade and you're not going to have any longevity in the market. Now, the last one is patience. This is probably the most important trading factor, emotion. If you aren't patient enough to wait for your edge to be present, you are going to be forcing trades. And there's nothing worse than forcing a trade because of your impatience and forcing something not based off of your edge and forcing something based off of your emotions. If you can't sit on your hands and be patient enough for your setups to trigger and only trade those setups, you are making trading so much harder on yourself. And I guarantee you, you will blow up an account and you will take very large losses because you are not patient. This relates to the charts because you have to plan. So every day I send out a pre-market plan in my Discord of the levels I'm watching, why I'm watching it, and potential setups that I could see play out. Now, this is all based off of price and volume, meaning my strategy has to do with how the market facilitates trade. It's how it auctions using price and volume and trading with supply and demand imbalances, where we look to long the market at demand and potentially short the market at supply depending on the context. So that's where your knowledge and intellect comes into play. You have to be conscious about reality, and you need to have a plan with your edge. This day we were watching NVIDIA to come into a key area of demand at 190.36, 189.28. If the market could bounce there, this could provide a good opportunity to play NVIDIA calls targeting the 195.01 supply. So I planned out, I have my levels in play, and now I'm just conscious of reality and do what the market is telling me when I trade my edge and whenever it's present. So we look to long NVIDIA down here at demand. This worked out right according to plan. And we look to take profits at supply, at resistance, at VWAP. It really depends on the type of setup and the context. But at the same time Nvidia bounced, we had a very strong rally on ES and NQ, which is the market. So we know the reality. We traded our edge, and you could have got a nice 18 to 20 point rally on Nvidia from the low to high, following your edge and being patient enough to wait for it. Now, this doesn't happen all the time. It doesn't happen every day, but if you're patient enough to wait for your edge to be present, trading is so much easier because I have confidence in this and I know that this will make me money. The next emotions are ones you have to nix out of your trading, get rid of if you have any of these, which are natural as humans. We are all natural, we're not perfect. But if you have any of these, I hope this chart will relate to a situation you were in so you could get rid of them and never deal with them again. So it's going to be hope, denial, despair, ignorance, insecurity, and impatience. These are all ones you want to get rid of. You cannot control the outcome of the market. Whatever's going to happen is going to happen. The minute you try to fight the forces is the minute you're going to make irrational decisions. You, as a trader, can only control the outcome of yourself and what's going on in your head. You can physically not control the outcome of the market. Therefore, anything forced will be a loss. The market is always going to be smarter than your ego. If you think you could outsmart the market, you could beat the market, you are going to lose. The market over ego 100% of the time. This comes into ignorance and insecurity. A lot of traders think they could outsmart the market, they could beat it, which it's true. You could get on the right side of the market, but the minute you let your ego do the talking is the minute you're going to lose. This comes with ignorance, this comes with denial, this comes with insecurity. Now you also have to follow your plan. Do not deviate away from it. This is a big one. I talk to hundreds of traders a day. A lot of them take losses, whether it be a small win that could have been a very large win, or they take a small loss that could have been a win because they don't follow their plan. They exit prematurely. They deviated away from their predetermined entry and exit points because they're trading off their profit and loss. They're not trading off the chart. The chart's going to tell you what's going on. The chart's going to say what's happening in reality, and it's going to give you your conscious awareness of the market. So the minute you trade the profit and loss, you're subconsciously trading off of emotions and not based off of the analysis that the market is telling you. If you are wrong, this happens all the time. I'm wrong constantly. Other traders are wrong. No one could be right 100% of the time. If you are wrong, just get out. It's simple. Take a loss. Would you rather a $100 loss or would you rather a $500 loss? Let your ego, throw it away. You could always re-enter if the market's ready. You're taking a loss because you mistimed the market. It's normal. If the market is ready at some point in the future, just re-enter. I've seen many traders get into a position, they take a loss, they stop out, but where they stopped out could have been another best entry, and they could have made all their profits back and then some. So always look to re-enter. If you're wrong, just get out. It's like holding a bomb in your hands. The longer you hold it, the deeper the hole you'll be in. You have a $500 loss. Just get out, accept it. Nothing you could do about it. There's no reason to keep holding in despair, in denial, and having hope that you think it's going to reverse up. Just get out. Would you rather a $500 loss or would you rather a $2,000 loss? Simple answer, right? My goal is not to be right 100% of the time in the market. So here's an example on the S&P 500. This was last week, I believe on Friday. Just to get the context of the market, we sold off into demand. We found buyers. We had a very strong rally the next day, very heavy volume, indicating more buyers present in the market. So we have very strong buyers in the market. We do have supply that forms, but because of the context of strong buying, supply zones will be less valid, especially with the action that we saw, I believe, on Thursday. We took calls off demand. So nothing really happened in the first hour of the market open, but if you were patient enough for more development in the market, you could have had a nice VWAP bounce right at demand, and you could have had a beautiful rally going into the afternoon session. Now, if you didn't take that trade and you were impatient, you would have probably bought up here where supply was forming, and you would have stopped out on a down move. And where you stop out is a good area for you to re-enter where the market does bounce right at demand. Now, this is a new reference area for the following day's action. We bounce off it, buyers are factored in. But going back to now hope, despair, denial, ignorance, and insecurity, this is where you let your ego do the talking and you let your emotions make the decisions for you rather than facts. So because of what I just mentioned, let's go to a 1 minute chart. So let's just say we play puts off of supply. We're not aware of the context, but we see this little consolidation here and we think, right? Key word here. We think the market's coming down. If you have any thought where you think something's going to happen, I can guarantee you it's the wrong decision. Your goal as a trader is to react and adapt to what the market's telling you, not thinking what you think's going to happen, if that makes sense. So now we enter puts. Let's just say our stop loss is a little risky. We're not too conservative. Let's just say we put it at the top of the supply zone, which I don't really recommend too often. Now the market starts reversing. We start sweating. Adrenaline's pumping. We start literally dripping. Our shirt's getting soaked. The market starts moving up and we're in denial. We're like, nah, this market doesn't make sense. We're going to start moving down. There's no way we're going to rally. We have supply. Maybe we have supply up here at some other point. I'm just going to hold on to this trade because I think it's going to come down, right? Now we're in for a $500 loss. We're denying that we're wrong. We're holding out of hope. We're holding out of despair. We're being ignorant about what the market's currently telling us. And we're insecure about our ego because we can't accept the loss. Now a $500 loss, held in, we kept holding, rallied another 10 points. Now we're down $2,000. Now we start dripping. Not only our shirt's soaked, our pants are soaked, our socks are soaked. Now we're down $2,000 and we take the loss all the way up here near the high and the market starts consolidating. And what was a good decision for a $2,000 loss could have been a $5,000 loss if we held all day out of hope, denial, and despair that the market was going to come back down after playing a bearish position. So if you take a loss, you have to follow your plan. Don't let your ego say, keep holding it. It's going to reverse. Don't think we're going to be right 100% of the time. Just follow your plan. Don't deviate away from it. If you're wrong, get the heck out. You could always re-enter if the market wants to be correct with our analysis at some point in the future. Now, the next batch is going to be openness, subconscious, action, greed, and fear. These are ones you need to have, and some of them you need to get rid of because they can be more of a backstabber versus actually benefiting you. So we need to be open to the story that the market is currently telling us. It's constantly flipping pages, giving us different things, throwing different things at us. We have to be open to it and react to the context and adapt to the current theme. If it gives us a red flag, throw up the white one and react accordingly. Subconsciously, I can only speak for myself, I have so many thoughts that go through my head on a daily basis about context and about being open and about reacting to the current theme. So it's very important you don't let these subconscious thoughts do bad thinking for you. You got to remove your need to make money. Greed will destroy you. Fear will destroy you. Fear, not only fearing to get into a trade, but fearing to lose profits. So you need to remove your need to make money and solely trade the chart. So here's an example on Facebook. Let's go to the pre-market plan today. We didn't have much demand below besides 357 and 355. We had a very important key level at 365.60 that if we break above, base above, or hold above, I'll be watching to play Facebook. It will also be helpful if ES and NQ were strong. So here's the 365.60 key level that I was talking about. Here is NQ. Keep in mind that this chart, very balanced. And here is ES. Very low volume, very balanced. So I did take this trade on Facebook. I know some members took this as well and made good, decent money off of it. We wanted a little more continuation. But because of how we reacted to the market currently trading, I took calls once we broke out above. It acted as support, and we got about a $2, $2.50 rally from that. We wanted to see more continuation, but we took profits along the way because we were open, we were aware, we reacted, and we adapted to the current market. It's very important for all your factors to align. When ES and NQ are balanced, when there is low volatility, when it's trading sideways, you are not going to have your follow through on equities. So it's very important for you to be open about this. Your subconscious thoughts are going off. You put it into action and you do what you have to do to make money. Now, this started moving up and I did not want to get greedy because I knew the current conditions and I took profits pretty prematurely once we did move up by 367. Now, it's important to not get greedy because if you were greedy expecting a bigger move, not aware of the current conditions, we would have got a pullback and your winning position probably would have, let's just say you were up $2,000 right here, you probably would have been down slightly or about break even depending on your entry. So never get greedy. Take your profits when you have them. It could really help you just by removing your need to make money and just trade what the market's currently throwing at you. Few last ones. The talking aspect to trading. If you have a lot of noise, you are following others' opinions, you can't do your own analysis, you are simply just going to make it harder. You're going to have all these thoughts coming in your head subconsciously, and it's going to affect your decision-making process. You have to be fluent. You have to think clearly. You have to have an open mind. You need to be mindful of the market. Another one is satisfaction. I'm never satisfied. I'm always looking for ways to improve. I'm always looking ways to get better. I'm always looking at different styles. How could I have improved this trade? What could I have done differently to not take a big loss? Or what could I have done differently to make more money? Never be satisfied. The minute you get complacent is the minute growth stops. And we always need to grow not only as traders, but as just humans as well with everything in life. You also need to have the courage to put trades on. If you don't have the courage, that means you don't have confidence, which means you don't have conviction, which it's going to be very difficult to trade. But I think I'm going to leave you all on that. If you enjoyed this video, I would really appreciate it. Share this with other traders, other communities. I feel like the emotion aspect to trading, a lot of people don't accept, they don't go over, they don't talk about because they think trading is a secret of just buying and selling when really emotions are a big part of it. So I'd appreciate it if you could just share this video, drop a like on it, comment any questions, and if you want to learn more, check out the links in the description below. I offer a very in-depth and educational course that will come with access to the Discord and no extra cost. But besides that, over and out. Peace.